What's up, mortgage coach community? Dave Savage sitting down with Tom Sherman out of McKinney, Texas, right outside of Dallas. Uh, if you looked up a professional mortgage advisor, and we're going to go one step beyond it and call it a liability mortgage advisor, this guy would show up. I mean, I've known him by reputation for many years. Always considered him just one of the good guys. He's a professional. He's an advisor. Uh, now, Tom, you've had mortgage coach for quite some time, but you've really got after it over the past couple of years. How long have you been a mortgage coach?
Man, I've had mortgage coach for 8 or 9 years. I've been using it pretty regularly the last 2 or 3, and super regularly, like every one of my clients getting it the last 12 months.
I love that. And just to so folks know what kind of production you do, what is your volume, both units and volume?
Yeah, so last year I did just shy of 500 units and 151 million.
So the man knows how to close loans. And
Yeah,
and the thing I love about you is you don't just close loans, you leave every family with a sense of financial well-being, financial education a lot better. So and I think that's important because there's a lot of loan officers in America that don't close a lot of loans, and they think they don't have time to educate them and enlighten them. And then there's a lot of loan officers that do a lot of volume and don't think they have a lot of time to enlighten them and educate them. So I one of the things I want to get out of this is, you know what, you can do both. You can, educate families and make them more fiscally literate, and you could do a lot of volume. So another question before we get into the topic at hand, you're a branch manager, is that right?
correct.
And just walk us through your kind of model, like how many loan officers, how many assistants to run your 500 loans. Just give us a feel for the team.
Yeah, so our branch did about 220 million last year, and we've got 3 producing loan officers plus myself, and then I've got 2 licensed LOAs. Then we've got a couple processors, ops manager, marketing people, assistants, that kind of stuff. But primarily people that are touching the loans or the people I mentioned.
Love it. And then you're with Benchmark, so you guys have an enterprise edition of Mortgage Coach, and not only does that come with some integrations, but I don't know what CRM you use, but what is your tech stack that's you're using to both drive the transaction and then the tech stack that's driving the advice experience?
Yeah, absolutely. So kind of the flow of our file, which I think is important to track. When a lead comes in, it's immediately put into Jungo Salesforce.
Okay.
And as soon as that occurs, everything is driven out of Salesforce. So we're sending all of our emails, all of our updates, all of our conversations, everything are tracked in Jungo. Once the application is actually done, that goes into Encompass. We've got obviously, like so many of us are using Encompass, and then that immediately connects with Mortgage Coach. So as soon as I run into Optimal Blue and run pricing on a loan, I can immediately create a Mortgage Coach presentation.
So you are using the Optimal Blue integration of Mortgage Coach, which, guys, it's a big time saver, and it improves accuracy and compliance. So just good reminder on that. Are you active with the integration from Jungo to Mortgage Coach?
That I'm glad you brought that up. We're just in the process of getting that going, but we're not. I wouldn't call us active in it right now.
All right. Well, just as a reminder to you, not only will it connect the TCA to Jungo, but you can automate TCAs. So for example, you could do annual reviews, quarterly reviews, you could do a query and then send out a bunch of TCAs. And I think that's super valuable. Any other technology, like are you using HomeBot or anything else to deliver think of it like your goal is to do a transaction, but then to create advice. Mortgage Coach is part of that. Are you using HomeBot or anything else?
Yeah, so a couple things on the Mortgage Coach. We've started that integration for all of our clients. So we now have all of our clients getting the annual mortgage review with a Mortgage Coach presentation.
Boom.
We also are sending them HomeBot, which has been incredible.
Boom.
And that's just a great way to let people know what their homes are worth. And I can't tell you how many leads that generates on a monthly basis. And then, of course, we're using Usurpa, which used to be Media Center, and that's just drip email campaigns, periodic text, that kind of stuff.
So we have an integration with that too. Do you know if your team is using that?
We are not using that.
Okay, well, some opportunities to improve automation and workflow. So we'll talk about that offline. Right now, I want to talk about, what are you doing? And then before we get into how, becoming a certified liability advisor, what is your primary referral sources?
Yeah, so we are tracking currently about 40 to 45% are past client referrals.
Okay,
The remainder of that is top real estate partners. We do
okay,
get some business from financial planners and our CPA groups as well.
love it. So, I mean, guys, very diverse uh, core being past clients. And I always talk about that should be your number one priority is building a client for life mortgage practice. The older you get, the longer you've done it, the more you just have that snowball rolling down the hill. And then having a combination of realtors, CPAs, and financial planners. That's you've got a lot of pillars in your business. So that's awesome. So let's get into the mortgage coach piece, and then let's go into certified liability advisor. Why have you decided to make mortgage coach an even bigger priority in your practice?
Yeah, that's a great question. So, Dave, I'll give you my mission statement because I think that's important. But my mission statement is that we coach and consult our clients through the largest financial decision of their life, helping them be better stewards of their resources with the ultimate goal of helping them reach financial freedom. And so if you think about all of those words that go into that mission statement, it ties in perfectly with what we can do with Mortgage Coach. It ties in perfectly with what we can do with managing people's liabilities. We just didn't have things to point to and say this helps us do that. We just did it. What really drove me more towards Mortgage Coach and utilizing that tool was it was something that I was, and I'm almost embarrassed to admit, but I was preparing this presentation on an Excel spreadsheet and sending it out to clients, and then trying to help them figure it out, and just total brain stressors, if you will. And Mortgage Coach took everything we were doing, put it into a wonderful package, and then gave us something that was super easy to be used by the client. And what's been ironic is the number of techie clients that I've had that have called me after they've gotten that presentation and just asking me questions like, how much are you spending on this tool? How in the world can you afford to do this? And just they're blown away by what it can do and the information that it gives.
Well, I'm gonna make a quick brag, and then I do have a question, and I'm gonna want you to do that value prop again because I just want to make sure everybody captures it. But guys, a lot of people don't realize that at Mortgage Coach, when we're creating technology, we're not creating technology to compete with other lenders. We're creating technology that compete with other consumer experiences, like Instagram, like Facebook, like Uber, like your banking app. So the the apps that are most used by a consumer, that's the competition. And so you've got to create something super slick, something super interactive, well designed. And anyways, every time we get like a Twitter or a Facebook or an Amazon employee that raves about our technology, we're like, that's right. We've got tech that is competing with every consumer experience there is. So thanks for calling that out.
Absolutely.
Yeah, so I want you to read that one more time, but before you do, I want everybody to notice that not once did he talk about lower interest rates. Not once did he talk about how fast he can close a loan. Not once did he talk about how available he is or that I return my calls on time. And so I want anyone that's listening to this, think about what most loan officers say. Like there's very few mission statements that don't say, I've got great rates, in some words, that I can close loans in 15 days. So read it one more time. And then I want you also to think about, what are you saying? And then I want you to compare it to what Tom's saying. So say it one more time.
Yeah, and it's funny, Dave, you mentioned that. I'm always looking for conversation interrupters, things that when I'm talking with a client that I can say or do that are going to interrupt the entire conversation. And when everybody's calling and talking about rates and service and all the things that everybody seems to talk through, if you get into that conversation, all you're doing is gonna chase the rate down to the lowest rate you can. So we totally stay away from that, and we tell our clients that our job is to coach and consult them So those terms are important, coach and consult, through the largest financial decision of their life, right? They're buying a house or they're borrowing their equity or whatever, the largest financial decision of their life, with the goal of helping them be better stewards of their money. Now, I use those terms because I want people to think about the concept of their money and how they use it, not just that they're getting a house. So helping them be better stewards of their money with the ultimate goal of helping them reach financial freedom. And so when we talk about those things, all of those words are buzzwords and they're conversation interrupters that clients will pick up on all of those. So someone who's a big Dave Ramsey fan will say, "Man, I love financial freedom. Tell me more." Someone who's a member at my church will say, "Man, I love financial stewardship. Tell me more about that." Your business people, "Hey, tell me more about what it means to be coached and consulted as you're borrowing money to get a house." And the reason that's so important is the consumer has gotten to the spot that they think a mortgage loan is as simple as picking up your phone, typing in some information, and getting a house. And if you try to chase that, the only value prop you're going to have is going to be the cheapest rate and can you close a loan in 2 weeks. If you're not going to chase that, you need to have a better value proposition, which
Yeah.
is what I think we've done.
And I do, tell me if you think, well, I know what you think because you've done it, but we as local referral-based professionals need to go beyond the transaction, and the word coach, the word advisor needs to be tangible and valuable. In fact, you need to deliver such a great experience to the family that it's worth them pulling out their checkbook, although we don't use checkbooks, Vimeo you $1,000. Like that was $1,000 in consulting that I just got, regardless of whether they do a loan with you. And I think if local referral-based lenders don't do that, they're going to get crushed by the betters, by the Rockets. And if they don't get beat by those guys, they're going to get beat by you because you're mission driven and you're delivering tech. And so I just think it's really a requirement going forward. Do you agree with that?
Yeah, I totally agree. And I will tell you what, rather than me just saying I agree, I've actually had clients that have said, "Hey, after we close a loan, can we still pay you to keep coaching us?" So it's,
Boom.
the conversation, when you can start that from the moment you meet that client and you start telling that client, "This is what we're going to do for you. This is the value we're going to provide for you." Once you do that, and then you actually bring in the mortgage coach presentations, all of these things just further add layers of confidence and trust that everything you tell them in that mission statement is true and correct.
Well, Tom, I can't tell you how happy I am that you are a leader in our community. Like I said, I've known about you by reputation for a long time. And I knew you had mortgage coach, but it wasn't like you could see, hey, he's not using it on every transaction. We're a Swiss Army knife that you would pull out when you needed to, but now you've created a rhythm around it. And I do believe that you could be a loan advisor without mortgage coach. You can't be the best, or you can't be your best unless you're a mortgage coach. And so, my mission is to crush the fee worksheet and turn every loan officer in America into a mortgage coach, which means they use our product, which means they give options. They are able to show the cost over time, because at the end of the day, guys, it's irresponsible liability making decision if you're not looking at the cost of the different decisions over time. And then if you're not using strategies like, hey, what if I prepaid the mortgage? What if I invested the difference? So let's go beyond that, because being a mortgage coach is, and for anyone listening to this, I think if you've done 300 TCAs and you're a black belt, you're a mortgage coach. Everything before that is your training to be a mortgage coach. And then I think, when you get to 1,000 and you're grandmaster, and then we've got loan officers that have done 5,000 TCAs. So I look at that and like, okay, you're a, 5-belt grandmaster. But liability, let's go into what does it mean to be a liability advisor? Because I know you've recently gone through the Borrow Smart University, Todd Bellinger's program. Why did you finally decide to do that? And what did you get out of it?
Yeah, so I actually got introduced to the program through Trevor Hammond, through Todd Duncan's elite group.
Oh, nice. Are
And
you part of
yeah,
Todd Duncan's elite group?
yes, I am. And so Trevor and I have talked a lot about it, and I've always been impressed with how he talks about managing money and how he talks about managing liabilities. And so I guess probably I don't know, 8 months ago, he told me about becoming a CLA, and just COVID and everything going on, we decided not to do it until here just a few months ago. And when we made the decision to do it, I took my loan officers. We now have 4 loan officers plus myself. And I said, every one of you is going to go through CLA, and I'm going to pay for half of it, and you guys can pay for the other half of it. And honestly, my follow up to that was, if you're not doing something like this, you probably need to start looking for another job, because the industry is going to be changing. It is changing. We all know that. And if you're not setting yourself apart with things like CLA and things like Mortgage Coach, you're going to become a dinosaur, and you'll be gone. So Todd started telling us, or Trevor started telling us about Todd's program, and we got involved in it. What was so interesting to me is all Todd has really done is put an incredible framework and a tremendous training program around something that I think I've done for years and years. But being able to sit down with the client and say, hey, I'm a certified liability advisor. Every single client says, what in the world is a certified liability advisor? Right? That's just not something that they hear. They hear CPA or they hear CFP, but when you tell them you're helping them manage their liabilities, it's again a conversation interrupter that says, tell me more. And so then you can talk to them about the fact that, hey, you're borrowing a lot of money. I had a client just yesterday that was a VA borrower, had sold a home in Virginia and was going to put down $300,000 on his house. And he was telling me he was shopping interest rates from 4 different lenders. Okay. And I said to him, I said, well, let me just ask you a question. Everybody's going to give you a quote on your interest rate, right? And he goes, yep, everybody is. I said, well, I'm not. And I said, my real question for you is, how much are you losing by putting $300,000 into your home? Conversation interrupter. And he looked at me and he goes, why hasn't anybody else asked me that? And I said, well, I'm not really sure what to tell you. I said, nobody else is thinking other than, hey, how do I get this loan and help me give you the cheapest rate? And I said,
Order taking. Yeah.
I'm just an order taker. Long story short, we were able to connect him with our financial advisor. He's taking that $300,000 and investing it very safely at 5 to 6%. And he's on a VA loan at 100% at 2 3/4.
Wow. So guys, there was so much packed into all that. So first of all, let's make sure we give a plug to Todd Duncan's Elite. I'm actually interviewing Todd for the Mortgage Coach community this Tuesday at 9. And the person that I interviewed before you called out and actually read a quote from this book. Again, one of my all-time favorite Todd Duncan books. Actually, this is my favorite Todd Duncan book, High Trust Selling. Because I always say high trust selling plus Mortgage Coach, you are a modern mortgage advisor. Now I think we have to add another acronym, high trust selling plus CLA plus Mortgage Coach. And that's a whole nother level. And I want to say something, and tell me if maybe you agree, maybe you don't agree. And I'm happy to debate this a little bit. I don't think every loan officer is going to become a CLA. I think it's an advanced degree. I think every loan officer should know how to high trust sell. I think every loan officer should be a Mortgage Coach. Like, that is a minimum going forward. I think CLA will give you a tremendous competitive advantage. I think CLA will help you create incremental opportunities for yourself and your consumers, but also know not every loan officer is a big enough nerd to do it. Or do you think everyone should do it? And I haven't been through it, so you tell me.
Yeah. So to me, again, I know this may offend some people in our industry, but I think there's a significant number of originators that really just don't care about the client. So I think the first question you got to ask is, are you an originator that truly cares about the client, or are you an originator that's just looking for another transaction? If you're just looking for another transaction, I think CLA is worthless. I think it's a waste of time, a waste of money. Don't waste your time. But if you're an originator that truly cares about the client, I'm not really sure how you can totally advise that client if you're not helping them manage their liabilities. It'd be similar to saying, hey, does your financial planner, introduce you to the stock market? Well, I mean, if he's not, what's he doing? He's got to be bringing in the different ways you can make money with your money. And if he's leaving out something as big as the stock market, he's missing something. I would say the same thing with an originator that cares about their client, trying to help their client reach financial freedom, helping them manage their largest financial decision of their life. If they're not getting trained on how to manage their liabilities, what are they doing? Does that answer that well?
It's powerful. And I think when you think of the opportunity that we have as mortgage advisors, the amount of equity in America, I want to say it's like a little over 18 trillion, maybe over, I think it's over 19 trillion now. And you look at the amount of mortgage debt, which I'm pretty sure it's over, a little over 16 trillion. And then you look at the total debt, credit cards, auto loans, student loans, it's almost $40 trillion. It's the biggest asset class in America. And all I'll say is this, as a mortgage industry, we have the best opportunity to help Americans, not just because we provide home ownership, but because we're helping them optimize those liability classes. Have you seen our new debt consol analysis and how we've upgraded our functionality within our platform?
Yeah, I've seen it. I haven't spent a lot of time on it, Dave.
Well, I urge you to check it out. I feel like the way we help someone manage mortgage debt, highly evolved, top of the mountain. We don't do a reverse mortgage, but we are, by the end of the year, going to have a reverse mortgage analysis, because we just think so many families, whether there's not a lot of families getting them, but there's a lot of families that they want to know.
Yeah.
And I just feel like it's pretty confusing, and we need to make it simple so that a family can just analyze that. And then I think we know there's a lot of folks that have a lot of debt in America, and we just want to make it so you can analyze that debt and decide how to optimize it.
Yeah, it's funny. One of the things that I learned through the CLA training that I think I knew, but it really made it crystal clear to me. But if someone has a home that's free and clear, that's worth $1 million, but they have $500,000 in car loans and credit cards and student loans, they don't really have $1 million in net worth. They have $500,000 in net worth. And
Right.
so you can help people realize that it now becomes a question of how do we help you get to true financial freedom quicker? And the
Right.
only way you can do that is managing liabilities.
Yeah, no doubt. So what are some of the most common ways you're using a total cost analysis right now? What's your kind of wheelhouse, whether it's a purchase or a refi? If there were three of the most common scenarios or strategies you're doing with a mortgage coach, what would they be?
Yeah, so we're about 70% purchase still in this market, 65 to 70. So really heavy purchase. So my primary use of the TCA is I'm always comparing, do you put 20% down and just put that money into the mortgage, or do you maybe do a 95% loan? You got great credit scores, your MI is really low, and then you use that debt to pay things off. So I'm using it as a way to show different programs. And then in the videos, I'm walking the client through what exactly I'm talking about. So I'll say, hey, you've got your payment's $2,000 with 20% down, and it's $2,200 with 5% down. And we're going to take that extra $50,000 and we've paid off your car and your boat, and we've put $15,000 into savings, and we're saving you $800 in your debt load. So it's a positive net of $600. And now what are we going to do with that $600?
So purchase money, financial makeovers. So they're coming to you like, I want to buy a house. Every other loan officer is saying, well, how much you want to put down? Here you go. And you're saying, well, wait, let's look at everything and let's give you some down payment options and give you some different financial strategies that are going to help you acquire that home in a sustainable way that optimizes liabilities. Is that fair enough to say?
Bingo. One other thing, and this I think will resonate with you. I've also used the TCA as a way to help people make a decision not to refinance a home. So, in today's market, you've got every lender out there saying, hey, you need to refinance your home. And so what I'll use it is as a way to show what the actual cost of that loan is. And as I'm coaching the client through the process, and they've just told me that they're going to be selling this home in 1.5 years, I'll throw a TCA out there that shows them their break even is going to be after they anticipate selling the home. And I've actually used that strategy, excuse me, as a way to generate listings for some of my top real estate agents. So what I've got my real estate agents doing now is they're calling through their database saying, hey, you need to consider refinancing. The client calls me considering refinancing. I'm asking questions about, move up, move down, family size, all the basic questions. I then generate a TCA that shows them what the actual cost of their refinance is. And then we're able to hand them back to the real estate agent now with the listing.
I love that. I'm not going to put you on the spot, and you're probably not in a way that you could pull up a move up analysis. But I would love to do another call and actually just go through some case studies where we've prepped a little bit more. Would you be game for doing another call on that?
Yeah, I'd love to. It'd be great.
Okay, so let's do that. I do want to make sure I'm going to show a case study. I have shown this one on the screen a number of times, but we're having such a good financial planning conversation right now. I think it's important. And we call this the move up analysis. So tell me if you've done some things that look pretty similar to this, where this was a loan officer that said, hey, you could refi and lower your payment by $322, or you qualify for 5% down for that bigger home, extra bedroom, better school district, and your payment would go up $507. Or you could buy that home and then sell the home. I think they had 120 in equity, and then you could recast the mortgage. So the payment goes up. You could recast it and lower your payment, or you could sell that home, put that 125, 6%, and boom, look at the net worth. And I think that's what the family ended up doing. So is this the kind of thing that when you described what you're doing, the way you're doing it?
Yeah, right on. Exactly right.
So guys, we call this the move up analysis. And then of course, guys, not only was the family well served, more liquidity, more net worth, bigger home, but hey, listing agent, you want to list your home. So what about in today's market? A lot of bidding wars going on, and folks concerned about appraisal gaps. And are you doing any kind of like, hey, plan A, you get the house the way you want. Plan B, it's got a little appraisal gap. Plan C is it's got the worst thing imaginable. And you're just kind of giving them clarity and confidence so that they'll make a winning offer. Is that happening?
Yeah, that's great. So many agents believe that if you're going to get an offer accepted in this market, you got to go in with large down payments on the contract. So, i.e., if you're a seller and you've got 5 contracts, one's 5% down, one's 20% down, and one's cash, you're obviously going to lean towards the cash. And what we've done is we've used the opportunity to put less money down and put less money down on the contract. I'll then follow up with a phone call to the listing agent explaining to the client that as I'm managing the client's liabilities, which again, I use all these terms in my conversations because they're conversation interrupters that are helping us stand out. So I'll tell the client, hey, we're putting an offer in with 5% down or 3% down. The client has authorized me to tell you that they do have more money, but we're going to use that money in the event that there's an appraisal gap. And so we go in with a lower down payment offer. We get those lower down payments accepted. And if the appraisal comes in low, then we're covered. What's been amazing is the number of borrowers that we've had that originally said, hey, we're going to go with 10%, 20% down. We use this strategy for a 5% down loan, saving the money for the appraisal shortage. But even after that appraisal shortage comes in, and let's say it wasn't short, we're finding a significant number of our buyers are saying, hey, I'm going to stay with your strategy. We're going to stay with less money down, and we're going to go ahead and invest that difference.
Love it. Well, guys, I'm going to go into wrap up. I got a couple more questions. Before I do that, I want to remind folks, go to hightrust.com. Todd Duncan's got an awesome event coming up here. I'm going to be interviewing him this Tuesday at 9:00. again, I can't say enough great things about Sales Mastery. I've been to every single Sales Mastery in the history of Sales Mastery and launched Mortgage Coach from this stage. I am a big fan, and a lot of mortgage coaches are going to that next level and becoming a certified liability advisor. There is a discount code, MCVIP, saves you $500. So, go to that link. We'll put a link down below. Put in the MCVIP if you want to check it out and save some money. I'm going to be interviewing more certified liability managers or advisors, because I think going to that next level, it just makes you more valuable to the consumer. And if you're more valuable to the consumer, first of all, you like your job better, you feel better about yourself, and you close more loans. So any closing thoughts you have before we wrap it up?
Yeah, I want to hit on one thing you said. So many people think that if you close a lot of loans, you don't have time to spend with your clients. And I would say that if doing a lot of loans, closing a lot of loans keeps you from advising your client, you need to do fewer loans. I've made a decision to spend more time on the front end advising our clients and less time on the actual loan process, simply because of the fact that I feel that there's more value in helping them manage their liabilities than there is in actually getting them the mortgage loan. Does that make sense?
It makes total sense. Well, I mean, you're obviously just a good man that cares about people, and you see the value that you can bring. And I think a lot of loan officers that think like that, they don't realize how valuable they can be. They haven't had the epiphany of a mortgage is not a mortgage. The right mortgage strategy is 10 times more valuable to the family than the lowest interest rate. And you could pick, there's so many situations where a family is looking for a loan and it's the wrong strategy, and it could be a 0.5% lower in a rate. But if someone is really looking at the full light picture, all of the liabilities, and proposing the right strategy, you could pay a point more in interest rate, because the leverage of debt reduction, the leverage of investing the difference with a responsible financial planner, that's life-changing wealth. Interest rates, usually an eighth, a quarter, 3/8, that's not life-changing wealth. Being an advisor is. So I would urge you, first of all, become a mortgage coach, go through our training. Tom, any other closing thoughts you want to make sure you say before we wrap this up?
No, man, I just appreciate you having me on. Thank you.
All right. Well, I'm going to go ahead and quit the recording. Stay here. I want to wrap up with you, but everyone who listened, hopefully we'll get more interviews from Tom. I mean, he is as far as I'm concerned, a legend in the mortgage space, and just an elite mortgage advisor. Does a lot of volume, gives a lot of advice. Give this a like, share it with your friends. If you're new to the industry, get on the Mortgage Coach team. Take care, everybody.